Renee Pirrong, Head of Strategy at Tellurian, thank you so much for joining us.
Well, thank you, Sean. It's a pleasure to be here and looking forward to the conversation today.
Well, it's an absolutely critical one because I don't think there's anything more important, at least from a European perspective in 2022. And I think now globally, as China reopens, then the outlook for LNG, the Europe in a way was fortunate, despite the challenges that China had to face last year with its COVID lockdowns. But it certainly eased the burden on Europe's desperation to find alternative gas supplies to the Russian pipeline. And they found that predominantly in the United States, where nearly half of their LNG imports came last year. And I want to talk a little bit of what the outlook for that continuing is. Clearly, US and as promised by President Biden when he visited Europe early in the year in 2022, that the US would be the supplier, would be able to meet some of the LNG demands. Will the US remain, do you think, a vital energy source of LNG for Europe in 2023?
I think the answer to that is absolutely, because as long as Europe requires LNG, the United States is the most sort of proximate source of supply and first and foremost, the most flexible molecule in the world. And I think it's unquestionable that Europe will continue to require LNG supplies through 2023, but well into the future. So to put some numbers to that, prior to the war in Ukraine, Europe imported about 170 BCMA of natural gas from Russia, which is equivalent to about 16 BCF a day for us Americans. Now, today, that number is about 1.7 BCF a day. So for Europe to backfill all of the gas that it was getting from Russia, it would require an incremental 120 million tons of LNG supply on an annual basis, which puts its total LNG requirement in the long run at about 150 to 160 million tons. Now, that's an enormous challenge, and it's going to require not only the LNG supply that the United States has today, but a robust amount of new infrastructure and projects to come well into the future to support that.
That's kind of nearly the equal of Qatar and Australia combined at current output levels in terms of LNG. It is a massive amount. How was the US? I mean, it's an extraordinary thing to think about the LNG, and we know for many years the amount of time it takes to build facilities. Obviously, Tellurian's in that process. And yet, in the course of literally, it seemed 12, 24 months, US was able to nearly more than double its LNG output. What was the backstory there?
Well, I think, certainly the amount of LNG that the United States exported to Europe was astounding. And it really is a function of a feature of US LNG contracts and the flexibility of the US LNG infrastructure and platform. So prior to the crisis, most of the LNG was sort of geared towards Asia, and the bulk of those volumes went to the Asian markets. But as we saw TTF price at an astounding premium to JKM last year, all of that, majority of that volume was redirected into Europe and really saved the European market from, a pretty astounding structural shortfall. And the fact that they've had a pretty warm winter so far this year also bailed them out. But the situation would be far more serious if US LNG had not been an important part of that puzzle.
So it's not so much that the US LNG producers were able to expand capacity, it was more about redirecting existing capacity away from Asia. What is the outlook for that going forward as China comes back to the market, given its sort of opening now? China was the biggest LNG importer 2021, dropped by, I think, something like a quarter, 25 to 30% in 2022, but expected to come back to play this year. How does these two things coexist, do you think?
Yeah, it's a terrific question. Last year, China took basically the LNG that is currently under contract. So about 60 to 65 million tons of LNG had already had under long-term contracts. Now this year, our sort of view is that number could grow by about 10 to 15 million tons. And that puts the market in a very tight balance relative to last year. As you mentioned, Europe didn't really have to compete with the great Chinese LNG demand surge that we've seen over the last few years. That's going to change this year, and we've already seen TTF start to trade at a discount to JKM in sort of the early days of 2023. So then
And
it becomes
TTF
really
is more the benchmark for Europe, whereas JKM is the benchmark for Asia.
Exactly, yes. So then it sets up a really interesting conundrum for the European market in 2023, which is, as we've seen, incredible conservation from a demand perspective. In Europe, actual demand there was about 15 to 20% lower than normal on a weather adjusted basis. We're seeing this year they'll probably end the withdrawal season with inventories at about half full, which is much higher than normal. So as Europe gets far more comfortable, partially because of weather, partially because of energy conservation, there might be a situation where more LNG goes into Asia this year than previous, despite the fact that Europe remains structurally undersupplied. So then there's sort of this paradox where Europe is going to have to continue to attract enough LNG cargoes to refill storage for the end of this year, or it's going to be in a far more precarious situation going into winter next year from this sort of period of complacency. So it'll be really interesting to see how the markets.
China's typically a price sensitive off taker of oil and gas. Does that, do you think, play a role here, that even though they're coming back, their appetite for very expensive LNG may be not there when they can perhaps replace it with more coal?
That's an interesting question. I mean, China is different than a lot of countries in the sense that it has a lot of other fuels that it can switch to, as you mentioned, primarily coal. But it's also an interesting question from a price sensitivity perspective, because the way that China's contracts are often structured is the major IOCs are able to pass on a lot of their high-priced LNG onto their customers. So sometimes the major NOCs are not necessarily as price sensitive as we would think they would be. And we've seen that historically in major price run-ups, not to the same degree we saw in 2022, but China is still willing to pay top dollar for cargoes, especially as they can pass that on down the value chain because of the way that market is regulated. So I think, we'll probably see prices this year not necessarily command the same sort of panic premium that we saw in 2022, but they will still remain elevated as China, probably drives up demand. And also there's a big question mark on new supply. We also have to remember there's very little new supply coming to the market in the next few years. Really, the only source of new supply in 2023 relative to last year would be the restart of Freeport LNG, which has been offline since June of last year, and there's still a lot of open questions as to when that 15 million tons can resume exports. So,
and what about behind that? I mean, in terms of the inevitable outlook, I mean, the US was able to redirect cargoes, as we talked last year, and now, back to being nearly, or is the world's largest exporter of LNG. Where is the outlook, the pipeline, if you like, for new supply, including Tellurian and others? As we've said at the top of our discussion, it takes a long time to break ground and bring LNG to market. Where is the backlog, the pipeline of new capacity vis-a-vis the US over the midterm, let's say 5 years? And does Europe give you confidence to invest billions and billions into this opportunity?
Yeah. So about 30% of all LNG capacity under construction right now is in the United States. It's a pretty big slug of supply. And that is, projects like Golden Pass, which will probably come to the market in the next 5 years. The real question mark is the long-term outlook. Now, sort of in the past, there's really only sort of 3 places where you can get substantial amounts of incremental low-cost LNG supply. And that was Qatar, Russia, and the United States. Now, obviously, all of the Russian projects that were under construction or in the pre-FID pipeline are extremely challenged right now, to say the least. Beyond the expansion currently under construction, Qatar really only has 16 million tons. So that leaves the United States to do the heavy lifting and meeting the 250 million tons of new capacity we see required by the market over the next 15 years or so. And we see about 275 million tons of US projects in the pre-FID pipeline, which represents about 70% of the world's viable pre-FID projects. So that's a lot of capacity that's going to need to come from the United States. And then the question becomes,
how does we just ask you on that capacity, how does it coexist with shale oil production? Because it seemed that the opportunity of gas and LNG exports from the US initially came from the big leap forward with shale oil production and the associated gas available with that. Shale now seems to have plateaued, if not declined, and doesn't seem to really be getting started again in terms of, even we're still 1 million barrels of oil down on pre-COVID levels on the US oil production. I just want to get your thoughts of where's the outlook for more LNG out of the US while shale remains relatively muted, shale oil production and investment.
Yeah, so I think the great thing about US LNG projects is it's not like a traditional LNG project where you're reliant on one reservoir, right? So in the United States, it's not just a shale oil story. There's a variety of US shale plays that can address the substantial growth that we see, the substantial call on new US LNG supply. So, the Permian is obviously a big part of that story. And the sort of rule of thumb is for every million barrels of oil growth, you get about 2.5 BCF a day of associated gas. But really, the big story, I think, is from the dry gas plays. So while sort of total US production has been fairly flat over the last year, we've seen remarkable growth coming out of the Haynesville, which is right in the backyard of most of these US LNG projects in the Gulf of Mexico. Now, the real challenge becomes, as you see, 17 BCF a day of new LNG projects required, even just to have half of the projects I mentioned come forward, you're going to see a lot of new pipeline projects that are going to need to come out of the Marcellus and the Permian and even the Haynesville to support those new projects. And I do think that ultimately the resource base is not in question, and ultimately the upstream producers will produce enough gas to feed demand. And so I'm really not concerned from a gas supply perspective.
Let's talk a little bit about pricing outlook for 2023. Obviously, last year, 22, we saw off the charts, literally unprecedented record high prices for gas. And then, much to everybody's shock and surprise, counterintuitive again, gas prices have fallen in Europe to below where they were pre-Ukraine, Russia's invasion of Ukraine. This is a pretty volatile marketplace. What is your thoughts and your outlook for where gas prices could go in 23?
Sure. Well, first I'll say I don't know what weather gods the Europeans have been praying to, but they were clearly listening, because I think that's a big reason that we've seen gas prices fall. But it's remarkable, right? We're talking about sort of 20 handle gas prices as being relatively low, which shows how much we've had to really change our mentality for what gas and LNG prices look like. I mean, in 2020, we were talking about a 2-handle LNG price, right? So volatility is the watchword for this market. Now, that said, I don't think anybody would claim that the sort of 32, I think we hit almost $100 in MMBTU gas prices of last year, were anything remotely sustainable. And it's healthy that the market is sort of finding its footing right now. So I think, the panic pricing that we saw last year might not be there for probably the first 9 months of the year. And we'll probably see LNG and European gas prices find some stability at around switching thresholds, right? So that would be gas, oil, and sort of diesel fuels for switching in the power sector. And also, we can't forget how high coal prices are. I mean, we've seen heat rate adjusted coal prices in Europe trade above Brent parity, which is just absolutely mind blowing. So I think that if we are kind of looking for some stability or so, for gas prices to get their footing, we should probably look for where those switching thresholds are, especially as we see energy conservation sort of tail off with lower prices and higher industrial and rescom demand.
If we wrap up, Renee, just in a slightly bigger picture over the horizon sense of where the global gas market is going, and LNG obviously being a big part of that. We started out our conversation talking about the three big suppliers, US, Russia, and Qatar. Of course, there are others in between, but ultimately they're the three big ones. And there was a long-term view that Qatar would be the Asian market. The US would sort of get in there as well, and Russia would stay in Europe. Now everything's up in the air. Russia gas is sort of locked in the ground for a while. Where do you see the big picture over the big wheel of time of where flows will start to anchor in? Is what we saw last year just a temporary moment, or are we starting to see the sort of the threads for longer term flow directions?
Well, I think what we saw last year is a feature of the market, right? So, historically, LNG was kind of a boring market. You saw LNG trade from point to point, and it was fairly predictable, and there was not a lot to keep us analysts very busy. But as we've seen so much liquidity enter the market, and frankly, the flexibility that is inherent in the US LNG complex, I think it'll be increasingly harder to predict where LNG will flow. And I think that's a good thing. I think that just means that the market will continue to be robust and flexible, and volumes will flow to where they need to go. And I think that's a great thing. And ultimately, the real question of where we see LNG markets going is, there's no question that natural gas is the fuel of the future, and that we're going to see a lot more of it. And every region, whether that's Europe, Asia, or the Americans, is going to require a lot more LNG. And the United States, I
But
think,
what about where LNG and pipeline intersect, so to speak? I mean, we're now seeing some emergence of a Russia into Turkey pipeline that might be a backdoor into Europe, and Yanni will start to reconfigure things or not. Central Asia becomes a player. Some of those bigger logistical, because of course LNG will depend also on where pipeline goes. Will Russia build more pipelines into Asia, into China? Will it go with LNG? Some of those bigger picture reconfigurations. What are your thoughts, particularly, let's say, on the newest one emerging as a conversation piece, Turkey?
Sure. Well, I think from a global gas perspective, I think we saw last year or the year before LNG surpassed pipeline as a international trade. So that's an interesting data point right there. I think it's clear that Europe is not going to take a lot of Russian gas. And even before this crisis, Russia was looking more towards China, pivoting more towards China as a consumer. Now, the question is, how quickly will that happen? And we've seen the first Power of Siberia pipeline took almost a decade to negotiate and is still ramping up. So these things do not move quickly, and China has a lot of leverage right now and could slow play it if they want to. So if we do see Russia pivot, I think it will be to China. I don't think there's a lot of feasibility of Russian gas flowing south towards India, but who knows in this market. I think that's kind of the overall picture from a pipeline directional perspective.
Well, we're certainly going to have to keep an eye, as you say, LNG and gas analysts. LNG in particular will be, I'm sure, very busy again. We must wrap it up there. Thank you so much, Renee Pirrong, Head of Strategy at Tellurian. Really appreciate you joining us at the Global UAE Energy Forum today and sharing your insights on the outlook for LNG.
Thanks, Sean. It's been a pleasure. Thank you.